Todd Mitchell here for Tuesday, October 15th. And the chart we're looking at today is crude oil, CL, right? The @ sign CL is the continuous crude oil futures contract. Let me show you what I'm looking at in here, what I'm looking to do. As you can see, the market is really starting to coil up here, right? I mean, look at, draw a little trend line down from those highs. Draw a horizontal line out here. Even though I'm not really into those patterns, you can obviously and visually see that the market is really starting to contract. You'll notice that yesterday was an inside pattern, right? The high was lower than the prior bar's high, and the low was higher than the prior bar's low. Today, so far, we're trading inside of yesterday's range as well. And what I want to show you also is we're really at a big support level here. If we were to take the low that was put in place on April 18th of this year, this low down in here to this high, let's measure the Fibonacci retracements from April to that high, right? So the big run up here, right? April 18th low, this low right down in here, to the yearly high right up in there. You'll see that we're at the 38.2% retracement of that big move up, right? We've been able to hold here so far, right? And then we take it one step further, and let's measure another level. Let's measure from this low right here, which I deem is a significant low, and measure it up to the highest high here this year. And what you'll see here is what we call Fibonacci confluence, right? We measured from the lowest low to the highest high. You got the 38.2% retracement coming in right here. And then we also measure here which I call an active low, right, to this high. And look at, you get the 50% retracement of that smaller move is right on top of the 38% retracement of the April low to the yearly high. So we've got confluence sitting right here where the market's at, right? We've got another set of confluence between the 50% retracement of the bigger swing and the 61.8% of that smaller swing. So we got confluence again down in here, about 99 3/4 and change, okay? But so right in here, we're at our first level of support. I would be looking to buy this market. I want to wait and hold off to see what today holds. If today is able to break up through yesterday's high of 102.62, I'd be a buyer at 102, like 68 roughly, and roughly risking about 2 points. Actually, if the market's able to penetrate up through yesterday's high, my stop would immediately be below yesterday's low. So in order to get stopped, so that would mean that in order for you to get stopped out, the market would have to completely 100% reverse and take out the low, which is 101.06. So again, for today, if the market's able to take out that 102.62 to the upside, I'd be a buyer with the stop below the low of yesterday. All right, that's what I'm looking to do. Again, we're at support, right? Retracement confluence. We're trading between the 50 exponential moving average, and the 200. This is crude oil, the continuous contract, right? You want to play the front month, right? We're trading between the 50 and the 200. We're retracement confluence. And we're starting to really, really contract, right? After contraction, you see expansion. So I'm expecting a move in here somewhere. So if I'm not executed to the upside, then I'm going to wait and see what happens tomorrow. And hope that helps. Have a profitable day. Bye for now.